It has been a wild ride for the mortgage market. I'm Lucy Ann Lance, and it's a Money Monday with the University of Michigan Credit Union. So we decided we're going to look ahead to 2024. Owning a house is a rite of passage for many Americans. While buying a home was never particularly easy, in the past few years, it has become especially difficult. An unfortunate confluence of two factors have led to this difficulty: a rise in home prices and a spike in mortgage rates. With both of these factors working against potential home buyers, many people are wondering when things will get better. While nothing is certain, markets do move in cycles, so there's a chance that things could shift to a better position than they are now. To provide some more insight and analysis about the state of the real estate market, we are joined today by Mark Munzenberger, Financial Education Manager at the University of Michigan Credit Union. Mark, provide us with a summary of what we've seen so far in 2023.
Sure. 2023 has been, I would say, a really interesting and probably challenging market, for a lot of homeowners and prospective home buyers. A good news side of things, Lucianne, most homeowners have seen the values of their home appreciate, go up in value. And so, that's a good thing. We're building wealth anytime we have rising home equity. That being said, and I know there's a lot of, housing is a critical component to our overall economy. And we absolutely have seen a slowdown in home purchases, home refinances, primarily due to rising interest rates. Lucianne, right now, just for example, we're in the fourth quarter of 2023. We're looking at 30-year fixed rates of about 8% across the country. That's pretty high, especially compared when we look back over the past, 15 to 20 years.
So it really is the highest in 2 decades? Wow.
It is. And we really I don't want to use this word spoiled because that's not right, but we got used to rates in the 4 to 5% range for years. All of a sudden they're closer to 8, and that's really making it challenging, especially prospective first-time home buyers.
All right. So because of that, you're seeing there's a little bit of a slowdown in the market because of it.
Yep. Whenever we see interest rates go up a little bit, I think you'll see two things. First of all, first-time home buyers tend to be very budget conscious. It's obviously a huge purchase for them, and they're really trying to get a monthly payment that fits their budget. And the higher the interest rate, the more expensive that monthly payment's going to be. Here's another aspect, Lucianne, that is somewhat causing this current market to be stalled a little bit. We've got current homeowners that may have, over the last couple of years, kind of thought about moving, maybe upsizing, downsizing, but all of a sudden they're like, wait a minute, I don't want to lose this 3 or 4% mortgage rate to move into something else and get a 7 or 8% rate. And so what's happening is current homeowners are staying put. And that means there's not a lot of inventory right now.
So what happens when that inventory of available homes to buy is low, Mark?
Oh my gosh, Lucianne, the competition goes through the roof. We do a lot of home buyer classes and we kind of help our first-time home buyers get ready. But one of the things we tell them right away is be prepared for a very competitive market. Because the less inventory, the more competitive you're going to have 5 or 6 people bidding on one home, because there's not a lot to choose from. And it adds to the stress level, and it makes things slower.
You know what's interesting, though, that I have noticed, and I track the market a lot. I love houses. I love looking to see what properties are available. I've noticed, though, because people are holding tight, okay, so you've got less on the market, less houses for sale. Yet because those rates are higher, you've got people kind of holding off, deciding if they're going to buy right now because they're hoping those rates go back down, the mortgage interest rates. So I've noticed some properties are sitting and some people are lowering their price. And I'm just wondering, is this going to continue or not?
Interesting, because there has been, the market has kind of stagnated a little bit because, not everybody, some are more price conscious, some have to make a certain amount of money on their home in order to make that move, profitable and those type of things. So it's an interesting market. Lucianne, one of the things, and we'll cover this in a little bit, but I always suggest how valuable it is to have a realtor or a real estate agent that is really knowledgeable in this market.
Yeah.
You've got to have that partner, right? Because if you're trying to do this on your own, it's tough sledding.
Yeah, first of
Yep.
all, they're going to know the deals when they come up. They're going to know those houses when they go on the market the minute they do before they actually hit any of the realtor.com or Zillow.com. So you need them in your pocket, no question. Mark, mortgage rates obviously play a huge factor in determining what people can afford. So tell us about how mortgage rates have trended these past 24 months. How much have they gone up? What drives all of these changes we're seeing?
Right. And consumers have seen interest rates across the board for other products like their credit cards, maybe car loans, gone up. And what has happened, Lucianne, when we go through a period of inflation, which we have, starting in 2021, going into 2022, one of the tools that the Federal Reserve uses to, let's say, cool down the economy, try to bring prices down, is they raise the interest rates. They kind of increase that. And what happens is everything kind of falls in line with that. Mortgage rates go up, car loans go up, credit cards go up. Of course, we make a little bit more money on CDs and our savings account, but in terms of lending, there's a very much a domino effect. And so we've seen that over the past 12 to 18 months. Hopefully, fingers crossed, we're going to see sort of a turn in that direction next year. But right now, when the Federal Reserve raises interest rates, typically you're going to see very common products like mortgages and car loans fall suit.
But in order for the Fed to lower those rates, we've got to have inflation under control.
And that has been, I would say, a bumpy ride. It depends on what night of the week that you're watching the national news. There are times when all of a sudden it looks like inflation is trending down. But then just over the last, 30 to 60 days, we've seen news and announcements that it's not as low as they'd like. And so consumers are kind of caught in the middle. And they're like, oh, I'm frustrated because otherwise I'm working, I'm generating income, but borrowing money is expensive right now. And so they're hitting the pause button.
All right. When do you get locked in for your interest when you are getting a mortgage? Can you just, after you get an idea of what amount you can afford and you've got that approval from your credit union or bank, are you locked in at an interest rate at that point?
If you choose to do that, and really consumers have at the time they make application, should they choose to lock it in, that rate is usually good for, let's say, 3 to 4 months until they close on that property. There are times that consumers will choose to go through the entire mortgage process, get approved, but say, you know what, I'm going to hold off on locking this in because they're hoping, those fingers are crossed, that rates might be a little bit lower in a couple months. Lucianne, it's hard right now. You're taking a little bit of a gamble, when you don't lock in the rate because it could trend up a little bit over the next 60 days. So, but you always have the ability to lock it in at the time you make application.
All right. What about an adjustable rate mortgage, or ARM as it's known? They had seemed to gain some momentum over the past year. What is your opinion on those?
Well, an adjustable rate mortgage is a mortgage that where for the first, let's say 5 to 7 years, you're going to get an interest rate that's a little bit lower than what you'd get with a fixed rate product right now. But Lucianne, what happens after those 5 or 7 years, expires? That rate is going to adjust to whatever the market is. So while you may save a little bit of money now, 5 or 6 or 7 years from now, you're going to have to hold your breath because your rate could trend up depending on the economy.
Yeah, that could be dicey. So
Yep.
What about refinancing? Are people still refinancing in this environment we're living in?
Not as much as they were a couple years ago. However, to be candid, there are some people that still look at it. I would say that the common reasons, sometimes people like to reduce the term, maybe from a 30-year mortgage to a 15-year mortgage. Overall, that might save them some money. We do still see people that look at their mortgage and say, you know what, I've got some debt, maybe some credit card debt I'd like to pay off. I can use this equity in my home, take some cash out, and potentially in the long run, save some money because credit cards have pretty high interest rates. So there are some situations where people are still doing it.
All right. What advice do you have, Mark, for first-time homeowners?
Well, let's understand, Lucianne, that you and I both know housing is cyclical. Mortgage rates go up and down, home values go up and down. We've seen this in the past. So we need to be patient, understand that, we're probably going to see some changes next year. I highly recommend work with professionals. Work with a good realtor, a good real estate agent that knows the area. And we always suggest get the financing handled ahead of time. Get pre-approved, understand what you can afford, and then start looking at homes. Take it in that step, and I think it'll be a much easier process.
Yeah, and being pre-approved gives you an idea of what houses you should be looking at. No sense looking at something you can't afford, right?
I cannot agree with you any more than that. Yeah, you know, and I know, we've done enough budget segments. I'm somebody that I want you to enjoy that home, but I don't want you in a home that you ultimately can't afford.
Mark Munzenberger, Financial Education Manager at the University of Michigan Credit Union. He gives financial education seminars every month for the community. You do not have to be a member of UMCU, but we would love for you to be. You can explore all of that at umcu.org. umcu.org. I'm Lucy Ann Lance. This is Ann Arbor's Talk Station, 1290 WLBY.